G'day all, and he's from BlackBull Markets here. Behind me the chart of the pound dollar. We're going to start with this one right now. What we can see is of course a lot of volatility over the last few days, especially with that 100 pip gap that we saw to the upside formed as the market opened. It's pretty interesting because we are coming towards the end of the year and volumes do tend to die down, but in fact we're seeing quite the opposite with a lot of attention turned to the FX markets, especially on the pound. And when there's a gap in the FX markets, you know that they do tend to get filled pretty quickly. So traders, they're eyeing the jobs report out this morning. Of course, if we get a negative print and more ongoing concerns in regards to the whole Brexit deal, we could see a break of that 132.89, which is the new support level formed on the pound dollar, with a view to filling this area all the way down to 132.331. So do watch out for opportunities of a break to the downside, and we're going to analyze why this level here is important, especially these tops around the 135 area where we've seen recent rejection. So let's just switch this over to a weekly time frame to start with. What we can see is that we've been currently operating just shy of that 135. That 135 represents a pretty toppy area of resistance. Even going back to 2017, you saw a rejection of 135. We've recently rejected 135, so the bias is more closer to the downside than the upside in the pound, which does support that trade of that gap being covered at that 132 level. So if we go to a daily chart, we can also see a pretty toppy structure here going to the left of course as well, and at that 135 rejection point we can see there was a recent trend line formed here from the 13th of September, which did break last week, where we saw those lows in the pound all the way at 131.200. So again, the pound is susceptible to falls to the downside, and this big rally we saw from September to present was also due to a lot of the dollar weakness in the market. So as markets settle down for the end of year trade, we could see a possible move back to that 131 level where we saw that gap again. If I bring it up on that 30-minute chart, this area down here just shy of the 131.50 mark, we could definitely see a move back here if we do break that key support level as I eyed at 132.89, which also comes into play with this congestion zone. So opportunity here again, like I said, it's pretty toppy around the 135s up here. So the expectation of a cross of 135 is possible on the cards, however would take some serious revelations in the Brexit round to get above those points, but we are seeing rejections above those levels, and we are also seeing a very volatile and sensitive market to news that comes out from the Brexit scenario, or the Bank of England, for example, who are potentially also looking at negative rates. So any news from that, looking for a break of 132.89 to possibly fill that gap, which is, like I said, in the FX markets, when there is liquidity, gaps do get filled pretty fast. So that's the pound dollar. Do keep your eyes on this chart. It's definitely one to watch this week as we come into year end. Last proper week of trading in my view. Next week is Christmas, of course. Volumes should in theory slow down, but we are also seeing lots of swings in the equity markets. Big move yesterday, of course, in European indices. So do keep your eyes on the pound. Definitely an interesting chart for the week. Trade safe, trade consciously. All the best.